is buying the physical metal? Why? And will it be enough to offset institutions fleeing out of gold exchange-traded products? So for the answer, I turn to two experts here, Miguel Perez-Santella, Vice President of Business Development at Bullion Vault, an online service for investors to buy and sell gold. Also with us, Doug Cote of ING Investment Management. I think we're going to have a little bull-bear debate here. But first up, Miguel, I'm going to start with you. Bullion Vault's monthly gold investor index hit a 16th month high in April. What does that mean? What's the index?
Well, the index tracks how many buyers are versus sellers. And our buyers, the quantity of buyers were more, not the quantity, because one buyer was one vote. So it tracks the retail public, investing public, what their sentiment is.
Versus, say, looking at the price, which is going to be distorted by any kind of big movement in sort of buying and selling. What does that wind up telling you then when we have a two-day biggest drop in 33 years in April?
Well, that's telling me that people still are not confident about the economy, and they're buying in, and they're buying in for the purposes of a hedge on their investments. It's sort of like an insurance policy. Insurance policy.
So, and what was the volume like last month?
Well, for us, it was up overall 85% from the month the year before.
Doug, do you think that gold would make a good insurance policy?
No, I think gold is a bubble here, and if you look historically,
still in a bubble after that disastrous decline.
I'm bearish on gold, been bearish on gold, because I think it's a trade whose time is over. It was largely the fair trade. Fear is going out of the market, and when you see gold going down when every other asset class is going up, I think investors are, that speculation is going to move out of the market, and I think there's a lot of negative sentiment.
Miguel, do you agree? I mean, is the fear over here? Is the gold fear trade still overplayed?
Well, I think what's going on is you got the fast money moving back into stocks and equities where they're going to get a quick return, and they got to do that because they got to show their income. But the buy and hold money is buying gold and holding on to it just for long term. I mean, they see what the Fed's doing, and that's the reason I went bullish after it broke 1,200.
Because you always haven't been bullish. You're sort of a new bull.
I used to be a bear, yeah. I'm a new bull.
But even though we've seen all this money printing, if we can call it that for our argument's sake, it hasn't really resulted in inflation. So why do you think that you're going to see retail investors continue to pile in?
Well, it's hard to see that when the Fed moves one equity or whatever bond onto their books and gives everyone else cash, and that cash doesn't really make it to the marketplace. I think we will see inflation eventually, but until they raise interest rates, we won't see inflation.
Is there another shoe to drop?
I believe so. I think Europe is going to have some problems. I mean, you see it bubbling over in Spain, and, you know, people write off Cyprus and Greece like there's nothing going on there, but there's serious problems.
And what's your price expectation for that?
I hope we're going to try and test 1,700 again. It's quite possible we don't, because the bear sentiment in New York is very powerful right now.
Speaking of the bear sentiment, now, Doug, you were talking about France maybe being a periphery nation in Europe, but why do you think that gold might not move along with that kind of fear if we see that play out?
Well, gold is certainly an inflation hedge. With economic growth dropping in Europe. That's deflation. I think I see a lot of signs of deflation in Europe, and how is gold a hedge on that? And I think if you look historically how gold has done, look at back in the 80s, the last time it was a bubble. It went straight up, straight down. We had a 20-year bear market. Why do you want an asset class that could have a 20-year bear market?
And speaking of deflation, Miguel, if we do wind up seeing deflation, as Doug is pointing out, in Europe, well, what do you think is going to happen to gold then?
I think gold's going to continue to rise. It's going to be,
despite inflation.
Despite inflation, because people are worried about their money and their asset, and they're worried about the countries themselves. They're worried about stability, not about, you know, if the equities are going to do well or not. They're worried about the entire financial system.
And what kind of risk is there, though, if there is some kind of disaster in Europe, that the euro falls and the dollar rises, and that winds up sort of putting a cap on gold investment?
Well, it depends on what your angle is and what your purpose is for the metal. I mean, it depends where you are and what your personal position is. Obviously, Europe has seen actually bigger growth in buying gold than we have seen out of the U.S. at the moment. But we'll continue to see people putting and diversifying some of their assets into metals to protect themselves.
It's just a matter of how much, I guess.
Exactly.
Is really the question when you have the private banking division of RBS scaling back, but they still have some.
And there's a big difference. In 1980, when it went up, there wasn't as accessible to the public as it is now. Back in the old days, I mean, either you bought futures or that was it, you know, or you bought gold coins. Now there's many other products such as Bullion Vault where you can invest and trade on and off easily, you know, on your iPhone.